In this unit, we're going to cover cash sales, Texas finance laws, the buyer's right to rescind. We'll go over repossessions. Then we're going to delve into federal finance laws, including the Truth in Lending Act, the Equal Credit Opportunity Act, the Gramm-Leach Privacy Act. So let's go ahead and get started with cash sales. A cash sale involves any sale in which the purchaser of a motor vehicle pays the total cash price of the vehicle before accepting delivery of the vehicle. Cash sales do not have any type of financing involved. Cash sales must, at minimum, include a bill of sale or purchase contract, an FTC buyer's guide signed by the buyer, front and back copies of the title signed by both the dealer and the customer, and a title application receipt. If a dealer only sells vehicles for cash and financing is never involved, then the dealer is not required to have a license with the Office of Consumer Credit Commissioner. Financing companies offer motor vehicle sales contracts. So companies that finance motor vehicle sales in Texas are licensed and regulated by the Office of Consumer Credit Commissioner. Dealers who provide customer financing or arrange for customer financing through a finance company are required to be licensed by the Office of Consumer Credit Commissioner. An online finance company may have their own web portal for you to submit installment sales applications, but the large majority of online finance companies receive their credit applications through an application distribution service such as a dealer management system like maybe Dealer Track or Route 1. A retail seller is defined as a person in the business of selling motor vehicles to retail buyers in retail installment sales transactions. That's according to the Texas Financial Code 348.001. There are times that you may have a relationship with a finance company, such as maybe a bank or an online dealership finance company, which will be known as the finance company. When your customer wants to purchase a vehicle, you can log on to a financing company account and on your computer, input your customer information, and then click submit. Then the finance company assesses the applicant's credit quality, the deal structure, and if it meets criteria, provides a preliminary or conditional approval, so as long as the contract and the application verify out. The seller, in this case, you, the dealer, is at risk until assignment of the contracts are accepted. The transaction is always between the seller and the buyer, and it's the seller's contract until the intended financing company accepts the contract on what is known as assignment. If the financing company approves your customer's installment sales contract, then the customer will make payments to the financing company, and the financing company will transfer the purchase price into your account, normally within about 1 to maybe 3 business days. Buy here, pay here dealerships operate just a little bit differently. If you choose to become a buy here, pay here dealership, you might, for example, purchase a vehicle at an auction, then sell to your customer, with the customer making payments on the installment sales transaction directly to your dealership. Regardless of the type of installment sales transactions you are assisting your customers with, if you offer any type of installment sales transactions assistance, you are required to obtain a license with the Office of Consumer Credit Commissioner. Assisting with installment sales transactions will require you to follow several state and federal laws. We will first cover some of the Texas laws that affect installment sales transactions. Then we're going to discuss some federal installment sales transaction laws that you will be required to follow. Texas installment sales transaction laws. A retail installment transaction is a transaction in which a retail buyer purchases a motor vehicle from a retail seller and agrees with the retail seller to pay part or all of the cash price in one or more deferred installment payments. A retail installment sales transaction between a retail seller and a retail buyer must include an installment contract, according to the Texas Finance Code. That's 348.001. A retail contract or bill of sale is a separate document that must be completed on all vehicle transactions, whether or not financing is involved. A retail installment contract is an additional document and is required on all transactions that involve installment sales transactions. Failure to provide a retail installment contract on any motor vehicle transaction that involves installment sales transactions is a violation of the Texas Finance Code and the Business and Commerce Code as well. So I want to repeat that really quick here. Failure to provide a retail installment contract on any motor vehicle transaction that involves installment sales is a violation of the Texas Finance Code and the Texas Business and Commerce Code. So I want to make sure that you're aware of that. Texas law requires all retail installment contracts to be in writing. It must be dated and signed by both the buyer and the seller. If you're using a finance company, be sure the paperwork that is being printed during the installment sales application is compliant with Texas laws in addition to all federal laws. If you're operating a buy here, pay here dealership, be sure the documents completed by your attorney for you to use on every transaction are also compliant with all Texas and federal finance laws. Texas laws require the customer is always given copies of all installment sales transaction documents and will normally be asked to sign a document stating they have received copies of the documents. Dealers may give a copy at the time of the sale or by mail to the buyer on the address shown on the retail installment contract, and that's also according to the Texas Financial Code. That, once again, is Section 348.102 on that one if you want to look that up. Texas law also requires certain details must be included in the written retail installment contract, such as the cash price of the vehicle, an itemization of all charges such as fees for registration, title, any taxes, inspection fees, service contracts, warranties, automobile club memberships, debt cancellation, notice to the buyer, any documentary fees, and the annual percentage rate as well. And here you see an example of a retail installment contract, or you can see it's a very detailed documentation, a very detailed document that includes buyer information, vehicle information, the annual percentage rate of the installment sale, the finance charge, the amount financed, the total of the payments, and the total sales price. It will also include the number of payments, the amount of payments, and when those payments are actually due. Next, you'll see an itemization of the amount financed, which is going to include that cash price, the down payment, any payoff information, the unpaid balance of cash price, and any other charges, and finally, the amount financed. As you can see, the itemization of the amount financed must be clearly defined in writing. You can download this sample at the TexasDealers.com website. Just visit the TexasDealers.com website, go down to Texas Dealer Forms, and then scroll all the way down there, and you can click on the Motor Vehicle Retail Installment Contract link right there, and that'll help you download that form for reference. The buyer's right to rescind. A statutory right to cancel a contract or return a purchase, such as a motor vehicle, because the customer changed their mind, is not the norm in Texas. State law grants a right to cancel, which is also called a right of rescission, in only a very few specific instances. Once a contract is signed by a buyer, a copy of that completed contract has been given to the buyer, and the buyer has accepted delivery of the vehicle. It is a legally binding contract between the buyer and dealer, and then neither party may unilaterally rescind or cancel that contract. However, if a dealer fails to provide the buyer a copy of a completed and signed contract, a buyer may rescind the contract. I want to repeat that. If a dealer fails to provide the buyer a copy of the completed and signed contract, a buyer may rescind the contract. A finance company's refusal and return of a contract does not invalidate the contract. It remains binding between the buyer and the dealer. Conditioning a contract on subsequent acceptance by a finance company is expressly prohibited in the Texas Finance Code. I want to repeat that again. Conditioning a contract on subsequent acceptance by a finance company is expressly prohibited by the Texas Finance Code. In some scenarios, the buyer's right to rescind could allow your customer to return the vehicle they have purchased when financing is involved and you have not delivered a copy of the installment contract. So always please keep this in mind. Repossessions. Many dealers decide to finance their motor vehicles directly to the customer. A buy here, pay here dealership allows a person to buy the vehicle directly from the dealer, therefore bypassing a bank or a finance company. It can also lead to increased dealer profits, but it does add another level of compliance to your dealership. If you decide to finance the vehicles you sell, it is absolutely imperative that you seek further legal advice after this course, as the state of Texas has some very strict vehicle repossession guidelines. And I want to repeat that very important statement again. If you do decide to finance the vehicles you sell, it is imperative that you seek further legal advice after this course. When a dealer is offering buy here, pay here financing, there are many times when the customer cannot complete the terms of a signed retail installment contract. And in this case, the dealer may have to repossess the vehicle. So what is a repossession? Well, it is the gaining of the possession of a vehicle. And it does not matter how possession occurs. For example, the buyer may return the vehicle, or the dealer may repossess the vehicle, or maybe a repo company is hired. So there is actually more than one form of a repossession. You are strongly urged to seek professional or legal advice given this business risk. Many dealers will hire a professional recovery company to repossess vehicles. However, state law does allow a dealer to conduct their own repossession, but it is crucial that you follow every rule, every law, and every guideline during a repossession. To repossess a vehicle, a dealer must have what is known as a security interest in the vehicle that is being repossessed. A dealer has a security interest in a vehicle when the buyer signs a security agreement with the seller, such as a retail installment contract, and that's according to the Texas Financial Code, Section 348.108. Acceptance of collateral as a method of disposition is the method most likely used by dealers. A dealer's security interest in a motor vehicle must be perfected. Perfecting the security interest is accomplished by transferring the title, showing the buyer as the owner of the vehicle and the holder of the lien on the vehicle that was sold. The transfer of title creates a public record of the dealer's security interest and does give the dealer rights to repossession. The terms of default of the retail installment contract must be clearly disclosed in the installment contract. Most installment contracts require the buyer to make payments in a timely manner and keep the vehicle fully insured. A repossession occurs with the physical retaking of the vehicle. A voluntary surrender occurs when the customer willingly brings the vehicle back to the dealership. An involuntary surrender occurs when the vehicle is retrieved from the buyer, maybe at the buyer's home or any other location other than the dealership. The dealer or seller is ultimately responsible for compliance with financing laws. Dealers should not rely on finance companies or acceptance companies when it comes to protecting their dealership from compliance violations. I want to repeat that very important statement. Dealers should not rely on finance companies or acceptance companies when it comes to protecting their dealership from compliance violations. Before doing a repossession or offering financing of any kind, all dealers should seek professional or legal advice. It is very important given the business risk. Next, we're going to cover federal finance laws. So far in your dealer training course, we have basically been concentrating on state laws that come out of Austin. Now we're going to delve into some federal laws that come out of Washington, D.C. No matter what, we want to follow the state laws that come out of Austin, but we're also going to need to follow the federal financing laws that come out of Washington, D.C. We're going to talk about the Truth in Lending Act, the Equal Credit Opportunity Act, and the Gramm-Leach-Bliley Privacy Act. First, let's discuss the Truth in Lending Act. The purpose of the Truth in Lending Act is to promote the informed use of consumer credit by requiring disclosures about its terms and costs. The Truth in Lending Act also gives consumers the right to cancel certain credit transactions that involve certain credit card practices and provides a means for fair and timely resolution of credit billing disputes. The Act does not regulate the charges that may be imposed for consumer credit. Rather, it requires a maximum finance charge to be stated in variable rate contracts, such as your installment contracts. The Truth in Lending Act requires you to disclose the following information in writing to a customer that is obtaining an installment sale for a vehicle. So these terms have to be made in writing, okay? The length of the time of the installment sale, the amount financed, all finance charges, a schedule of the payments, the identity of the creditor, the itemization of the amount financed, any annual percentage rates, including applicable variable rate disclosures, a total of all the payments, the payment schedule, and then prepayment or late payment penalty fees. If applicable to the transaction, you also must have the total sales cost, the demand feature, the security, interest, the required deposit, and anything like that. Any legitimate financing company that you use should be able to print this up for you automatically on every finance transaction. But if you are going to be a buy here, pay here dealer, you'll need to have an attorney draw you up this document, since federal law requires also all finance terms to be in writing. So be sure to disclose all finance terms in writing. Next, we're going to discuss the Equal Credit Opportunity Act. When you're sitting down with a customer helping them get an installment sale, well, you will obviously be asking them several questions during the installment sales application interview. The Equal Credit Opportunity Act strictly prohibits many questions from being asked during any installment sale application interview. When helping your customers gain financing, you must also follow the Equal Credit Opportunity Act. It just ensures that all consumers are given an equal chance to obtain credit. Factors such as income, expenses, debt, and credit history are still taken into consideration when approving or disapproving credit. Anyone involved in granting credit, such as an automobile dealer that's arranging financing through a finance company, or automobile dealers offering buy here, pay here financing, and motor vehicle dealers acting as the lien holder of financed motor vehicles, must follow the Equal Credit Opportunity Act. As a creditor, you may not discourage your customers from applying for credit because of their sex or their marital status or their age or their race or their national origin, or because they receive public assistance. You may never ask your customers applying for credit to reveal their sex or their race or their national origin or their religion. You may never ask your customers applying for credit if they're widowed or divorced. You can ask about marital status if they're applying for a separate unsecured account, however. Requesting information about your customer's spouse cannot be done unless the spouse is applying with the customer. You may never ask your customers' plans for having or raising children. So you could, as an example, have a young couple applying for lending, and you ask them if they're thinking about starting a family. You just broke a federal law. So you can never ask your customers plans for having or raising children. You can't ask your customers if they receive alimony, if they receive child support, unless they are first told they don't have to provide that information, if they won't rely on these payments to get credit. So you normally don't want to ask a customer if they receive child support. You also can't consider whether your customer has a telephone listing in their name. A creditor may consider whether they have a phone, but they cannot consider whether they have a listing in their name. As a creditor, you may not consider your customer's age unless they're too young to sign contracts. And in the state, that's going to be 18 years of age. So that's really the only time you can ever consider a customer's age, is if they are younger than 18 years of age. So when evaluating your customer's income, you may not refuse to consider public assistance income the same way as other income. And I want to talk about that real briefly here. Let's say maybe you're a buy here, pay here dealer, and you've got one customer that receives maybe $2,000 a month working at some factory, and you've got another customer that makes $2,000 a month from some type of public assistance program. We have to evaluate those incomes identically, because we can never refuse to consider public assistance income the same way we do as employment income. You also cannot assume a woman of childbearing age will stop working to raise children, or discount or refuse to consider income because it's from a part-time employment, a pension, or annuity, something like that. And also, I want to make sure that you never ask that customer any type of personal questions during a loan application interview. As a creditor, when credit is declined, then the creditor, that could be you in some scenarios, must let the customer know exactly why their application was rejected. So you must give the customer a notice that tells them the specific reasons for the rejection within 60 days under federal law. Acceptable reasons would be, your income was too low, or you haven't been employed long enough. But we can't be vague. We can't, say unacceptable reasons like you didn't meet our minimum standards, or you didn't receive enough points on our credit scoring system. So, indefinite or vague reasons are illegal. You would have to be very specific on when you are letting that customer know exactly why their credit application was declined. I want you to be very aware. Credit applicants that have been denied equal lending opportunities under the Equal Credit Opportunity Act may recover punitive damages from your dealership for up to $500,000 or 1% of your net worth, whichever is left. Compliance, compliance, compliance. It is the name of the game, especially when we're talking about federal lending laws that come out of Washington, including the next law, which is known as the Gramm-Leach-Bliley Privacy Act. This is really a common sense law, but I do want to cover it with you because it will affect the operation of your dealership on a daily basis. The Gramm-Leach-Bliley Privacy Act includes provisions to protect consumers' personal financial information that's held by financial institutions. These regulations apply to financial institutions, which include not only banks, but also companies that provide any other type of financial products and services to consumers, such as motor vehicle dealers. So this law does apply to motor vehicle dealers whenever you're assisting the customer with any type of financing. So this is going to be any type of, installment, contract sales or anything like that. But there are basically three parts to the Gramm-Leach-Bliley Privacy Act: the financial rule, the safeguards rule, and the pretexting rule. The financial privacy rule governs the collection and disclosure of customers' personal financial information by financial institutions. The financial privacy rule requires financial institutions to give their customers a privacy notice that explains the financial institution's information collection and sharing practices. And in turn, some customers will definitely have the right to limit some of the sharing of that information. It also contains the safeguards rule. The safeguards rule requires financial institutions to have a security plan to protect the confidentiality and integrity of a person's consumer's credit information. You must be able to protect your customer's information, whether it's stored, in hard paper files or maybe on a computer's hard drive. We have to make sure we protect our customers' financial privacy. Hard paper files should be stored in a lockable type of paper storage system, and any computer used to store customer information or any computer used during maybe an online application that you're using through a finance company must have the latest firewall, spyware, or antivirus protection. So whatever computer that you're using in your dealership, you want to make sure that you have some type of antivirus protection like, Norton or Windows Defender or something like that. Because this law also will hopefully prevent, say, for example, a hacker from coming across the internet and getting onto your computer and stealing your customer's financial information. Remember, same goes true if you print up just a loan application document and you left it on your desk and another customer walks by and actually sees it, you've violated the law. Okay, so you want to make sure, it's pretty much common sense, but whenever you print up a loan application, as soon as the deal's done, let's get these files stored in some type of lockable cabinet or something like that. You don't want those files laying around on your desk. This law also contains what's called the pretexting provision. The pretexting provisions of the Gramm-Leach-Bliley Privacy Act prohibit pretexting, the use of false pretenses, including fraudulent statements and impersonations, to obtain a consumer's personal financial information, such as bank balances. So something else I want to talk about is the privacy notice. The privacy notice of the financial privacy rule must be clear and accurate and a statement of your company's privacy practices. And it should include information you collect, with whom you share the information, and how you protect or safeguard that information that you have on file during a loan application interview. So you definitely want to make sure of that. The privacy notice also must explain that consumers have a right to say no to the sharing of certain information, such as a credit report or an application information, with the financial institution's affiliates. And they also have what's known as an opt-out right. Consumers and customers have the right to opt out or say no to having their information shared with certain third parties. The privacy notice must explain how that can be done. And for example, providing a toll-free telephone number or maybe a detachable form with a pre-printed address is a reasonable way for customers to opt out. Requiring someone to write a letter as the only way to opt out is not. If you provide any type of vehicle financing, either from a lending institution such as a bank or a finance company, you must provide each customer a privacy notice that discloses what you will do with such information. You've got to safeguard customers' information and protect any customers against companies that obtain false financial information under false pretenses. It's not recommended to start a buy here, pay here dealership if you've never operated a dealership in the past. It's always a good idea to start your dealership using a finance company or maybe having a bank help you finance your vehicles when you have a few months or years under your belt as a licensed Texas motor vehicle dealer. You might want to explore operating your own buy here, pay here dealership. Be sure to consult with a licensed Texas attorney that specializes in Texas motor vehicle laws before offering any type of financing. One more time, I want to say that again. Be sure to consult with a licensed Texas attorney that specializes in Texas motor vehicle laws before offering any type of financing. Let's go ahead and do our unit review. In this unit, we've learned that all retail installment contracts must be in writing. Dealers must comply with Texas finance laws, and you'll also be required to comply with federal finance laws. And we talked about the buyer's right to rescind, and always make sure that you follow all strict repossession guidelines. Always remember, copies of all finance documents must be given to the customer. Dealers must comply with the federal financing laws, such as the Truth in Lending Act, which requires all finance terms to be in writing. The Equal Credit Opportunity Act, which ensures all consumers are given an equal chance to obtain credit. Remember, the Gramm-Leach-Blindley Privacy Act protects a person's financial privacy as well. To review this unit, as stated before, just visit texasdealers.com, then click on the dealer training videos, and you can review all this content at any time after you've completed your course.